Picture this. You walk into the bank feeling confident, maybe even proud, because you're making a deposit and doing what everyone says is the responsible thing. You think your money is safe, growing, protected. But the truth is very different. Your money isn't sitting there waiting for you. The bank takes it the moment you walk out the door and uses it for its own goals, loans, investments, and profits that will never come back to you. Meanwhile, the value of your savings shrinks quietly every day from inflation and fees, and interest rates that seem designed to benefit them far more than they ever benefit you. The financial system wasn't built to make you rich. It was built to keep you dependent. In this video, we're breaking down 14 money secrets banks really don't want you to understand. Because once you see how the system actually works, you'll never look at your bank the same way again. And when we reach secret number 11, you'll understand exactly why that friendly banker smiles at you like you're their favorite customer. Let's start from the beginning. Most people still believe keeping money in a bank is the safest and smartest way to grow wealth. You deposit your savings, you see the tiny interest rate, and you think, well, at least I'm getting something. But that something is almost nothing. If you deposit $1,000 at 0.5% interest for a year, you'll earn $5. But if inflation is 3%, the real value of your money drops by 30. You're already losing $25 without touching anything. Scale that across years or with larger amounts, and inflation quietly eats the purchasing power you thought you were protecting. And the bank knows this, because while they pay you a fraction of a percent, they lend your money out at 10 times, 20 times, even 40 times that rate on things like credit cards. You get $5, they get hundreds. And here's the part most people never think about. Banks legally create money every single day. If you deposit $1,000, the bank only needs to hold a tiny fraction of it. The rest can be lent out. They keep 100, lend 900, and yet when you look at your balance, you still see your full 1,000. The person who received the 900 sees it in their account too. Just like that, money appears that didn't exist before. Multiply this process across the entire system, and banks essentially manufacture money out of thin air, then charge interest on the magic they just created. Now think about credit cards. They're sold to you as convenience, freedom, flexibility. But for banks, they're the perfect trap. With interest rates around 20%, $1,000 of debt can quickly turn into $1,200, $1,400, even more if you only make minimum payments. Most people with credit card debt admit they can't pay it off this year or even next year. And the bank knows this. They don't want you to pay in full. They want you to get stuck because that's when credit cards become their most profitable weapon. And here's the part that might make you angry. The richer you are, the less you pay. A billionaire gets a mortgage with interest barely above 1%. Someone living paycheck to paycheck gets charged 4, 6, even 8%. The person who needs the most help pays the most. The person who needs none gets rewarded. Banks call it risk management, but it creates a system where the poor stay poor and the rich get richer. But the wealthy know something else too. Debt can actually make you richer if you use it the right way. Borrow cheap money to buy something that grows faster than your loan costs. That's why rich people borrow to buy assets, not cars or gadgets. Their debt makes them money because inflation, appreciation, and leverage are on their side. Banks happily support this strategy, especially when it comes to helping the wealthy avoid taxes. If you're a billionaire holding company shares, selling them triggers massive taxes. So instead, you walk into a bank, hand over your shares as collateral, and borrow millions or even billions at low interest. No taxes, no selling, no problem. You get instant liquidity while your investments keep growing. Banks love this deal. It's safe for them and incredibly profitable. But it's not a privilege they extend to ordinary people. And that's just one corner of the game. Offshore accounts hide trillions of dollars that never get taxed at all. Huge corporations set up tiny offices in places where taxes are zero, then claim their profits were made there. Countries lose billions, and ordinary people are left to make up the difference. Even mortgages, the thing everyone calls the best investment, quietly make banks wealthier than they make you. A $300,000 house at a normal interest rate ends up costing closer to $600,000 by the time the loan is done. Half of everything you pay goes straight to the bank before you even think about repairs, insurance, taxes, and everything else that comes with home ownership. And while all this happens, the bank keeps squeezing out small profits from every direction: overdraft fees, maintenance fees, ATM fees, transfer fees, inactivity fees. +30 billion a year just in overdraft penalties alone. That's money taken directly from people who were already struggling. The whole system pushes you toward borrowing, not saving. Low interest on savings, high interest on loans. It's designed so you never truly get ahead. Student loans trap young people for decades. Car loans, personal loans, payday loans, every one of them engineered to turn debt into a lifelong product. But the most shocking part comes next. Banks gamble with your money behind the scenes. Most people don't realize deposits aren't just held. They're invested, often in risky ways. The 2008 collapse was caused by banks playing with toxic financial products. When everything fell apart, ordinary people lost homes, jobs, security. Banks got bailed out and executives walked away with bonuses. And if you think that's where the injustice stops, there's more. The less money you have, the more things cost. The poorer you are, the more you pay for credit, for access, for basic financial services. It's like a quiet tax on being poor, and banks are right at the center of it. But none of this works without one essential ingredient: your trust. The banking system only functions because people believe their money is there. If everyone tried to withdraw their savings at the same time, the system would collapse. That's happened before. It's why banks build marble lobbies and giant buildings, to make everything look solid and safe. Now you know. 14 secrets that show the system was never built to make you wealthy. It was built to make banks wealthy. That doesn't mean you should fear banks. It means you should stop assuming they're on your side. Learn the rules, understand the game, and start playing it in your favor instead of theirs. Thanks for watching InvestingFlix, where smart money learns smarter moves. Subscribe for more insights that grow your wealth.